So partnerships, what are your thoughts on setting up a partnership compared to just a husband and wife buying property in their own name? So I know there's a couple of advantages, but what are your thoughts around those?
I think it depends on what the partners are looking to achieve. So of course, if you have a husband and wife who decide to go into business and just buy properties, and as you say, they are jointly owned, that's not a partnership as such. So it kind of depends. Are you referring to having a limited liability partnership, a normal partnership, or does it not really matter?
Yes, it doesn't matter. So I know there's differences between a normal partnership and LLP in terms of you have to file your full accounts and things like that, and the capital you can introduce and bring back out again. But essentially, what one do you see most common, and which one has more advantages than the other?
I like LLPs, and you've kind of alluded to one of the benefits that I quite often promote, which is obviously having a capital account, and then the benefit of obviously being able to reduce that capital account as time goes on, which is a big benefit. Then of course you can add other members, ordinary members, into the LLP, and then let's say that they are your children. So let's say somebody's got a daughter, she just finished university, isn't working, and they could add her as an ordinary member and start paying her some income to get her involved in the business. So that flexibility I find always to be very useful. So I am a big fan of limited liability partnerships. How about you?
Yeah, see, I think I prefer normal limited companies. So, it's much more straightforward. You've not kind of got to worry about. So if you've got an LLP, if their earning goes above a kind of a crazy level and they have these big plans to grow big, then they're going to get hit with kind of higher rate taxes and things like that. Especially where people are kind of just starting out and they think, okay, yeah, I want to grow this massive portfolio. So I suppose, there's a real good argument for each of them, especially with LLPs. You've got a lot more flexibility on the cost you can put through. You can kind of put, even with your cars, that's a massive advantage to having LLP, is that you can put that proportion through, which you can't for a limited company. But yeah, I think LLP, limited companies are just a bit simpler. What are your thoughts on that?
Yeah, so I mean, if obviously the business has a car or a number of cars, you've got that, and then obviously there are other issues with a limited company in terms of benefits in kind, which aren't caught by the rules for a sole trader partnership or a limited liability partnership, which obviously offers the additional flexibility. So I guess it depends, and I have a pretty open mind towards whatever people want to do, and I kind of share with them all the different possibilities and let them choose. Now, of course, if somebody's into service accommodation, for example, Joshua, and they're buying lots of units, and there's a high amount or a large value for capital allowances claims. If you've got a limited company, for example, and they made £100,000 profit, and they've got £100,000 worth of capital allowances in their annual investment allowance, for example, they write off the taxable profits, and let's just assume that £100,000 is sat in the bank. Now, if they want to take that money out, they've got to pay income tax. Of course, they've got their personal allowance, but above and beyond that, whether they take it as a salary, bonus, dividend, they've got to pay income tax on it. Whereas if that's a limited liability partnership, for example, the £100,000 profit can be written off against the capital allowances. The 100 grand is sat in the bank, and the partners can now decide to choose whatever they do with the money, so they can spend it on whatever they want. So that again is an advantage which you have with a limited liability partnership, which you don't with a limited company, but that's obviously subject to capital allowances. Then you've got the added complexity, if I may say so, of considering, should I have a mixed partnership? So should I have LLP with a corporate partner. How does that work? Obviously, there are certain rules, as you know, with mixed partnerships, which people need to be aware of. But if done properly, I think it's a good mechanism, and it opens up possibilities. So if it depends on what people are looking to do, is what I would say.
Yeah, absolutely. We've got a client at the moment. They've just it's an LLP, just in a capital allowances claim that's gone through, 40,000 capital allowances, so they won't be paying tax. They've only got one property, so they're not paying tax for the next 2 or 3 years on that income, which is fantastic.
Yeah.
In terms of the corporate structure and setting up a kind of a mixed hybrid LLP, when do you find that tending to be suitable? Kind of what scale, and is it applicable to people who already have a property portfolio, perhaps in a partnership?
I think size isn't important to start off with, especially if they're starting up, because if they are reasonably ambitious, reasonably serious about growing their business, they'll very soon get to a stage where a mixed partnership, for example, may apply to them. So I don't always look at where they are today. I would say, okay, where are you going to be in 3 years' time, 5 years' time, 10 years' time, depending on how long they want to remain in business. From my point of view, and I'm sure you'll have a different view, the size of the business doesn't matter now. It's what we're going to do together over a number of years. What's your view on that?
Yeah, I absolutely agree. So a lot of people, they might think, okay, it's going to cost me so much money now to get this proper structure set up right. You know, I've only got one property now. Okay, great. How many properties do you want? Don't look at it as a cost today. Look at it as a saving for the future. Because effectively, it's kind of thinking as opposed to being in a fixed mindset compared to a growth mindset. And if you do have these plans of building this vast business empire, getting all of these properties, you need to be acting now as if you already have. And part of that includes getting the right structure in place and the right tax advice, essentially. Yeah, so I'd certainly agree with that. Even if it means perhaps 1 or 2 or 3 years of higher accountancy fees, higher compliance costs, a bit more work. If after then you gain traction, then it's really going to kind of start having an impact later on down the line. And I'm sure you would agree that putting all of this stuff in place later on, group companies, mixed partnerships, it costs a hell of a lot more later on down the line than it does to get that in place from day one.
Interesting you say that, because I was on a webinar a couple of days ago where somebody invited me to talk about property tax to a bunch of sophisticated property investors, and that was one of the observations I made. As in, if you do things in advance and think things through, it's going to probably be more efficient, more effective, and cheaper for you to do so once you've started something. And then if you want to restructure, it might cost you quite a bit of money. And there's no issue with that, because usually the fees associated with that should not be as high or as big as the benefit. However, if you do that from day one and you thought through things, you could avoid all that. So you're absolutely right. To restructure, reorganize, change things can be a costly exercise. And if a need arises for that, so be it. But if that was something you could have done earlier, then it's important that somebody has those options and they're able to fully consider that before they decide on their business structure.